India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Nigel. And I have to say, Nigel, the rains are finally here.
Yeah.
It's pouring, and it's been pouring since last night, almost non-stop. And if you're watching this, we'll, of course, try and update what's happening across the city through the course of the morning. But I think there are updates coming in from the BMC, other authorities, etc., because of waterlogging and other issues in many parts of the city. So stay safe. But I think it's also good news that rains are finally here, much awaited.
Well, that's right. And a lot of children will be happy because schools as well are shut, at least for the first half of the day. But just stay safe out there. And, my experience, I came from Bandra to Lower Parel. And it was clearing out, or it was absolutely clear. So hopefully we're bracing for a better day ahead, at least a safer day.
Looks like it. We'll see how it goes. As I said, we'll sort of update you in terms of, the authorities, lots of BMC, the IMD, railways. I mean, this is a city which is on the move, as always, especially on Monday morning. So we'll tell you what you need to know. But let me just kick it off with the markets, right? Because that's, I think, the other part where there is so much which has happened from where we left off at 3:30 last Friday. The big data point which markets were awaiting was the US jobs data. And that had the potential to move markets. Well, it did. Now, the headline number was in line. I'll get to the specifics in a bit, but the details were softer. And that triggered lower yields, and it triggered a rally in US stocks. The number is 206,000 new jobs added in the month of June. This is in line with the 190-odd thousand, slightly above the 190-odd thousand, but largely in line. So it's a solid headline number. But as I said, the details were softer. The prior 2 months number for the US jobs were also revised downwards to about 111,000 jobs. And temporary workers, there's a category called temporary workers. That category saw a plunge of 49,000 jobs. That is, that plunge is being talked about quite a bit because of one reason. In terms of order of magnitude of a plunge, it is the largest we've seen since the recession of 2008 in the US, the global financial crisis. Now, unemployment rate, that has steadily risen to about 4.05. I'm saying steadily risen because the low was 3.43, not last month, but the cycle low was 3.43. And from there, we are plus 4%. So what does all of this mean? You sort of take into account Fed Chair Powell, who's consistently, Fed Chair Powell was, even when data in the first half, the first quarter especially, was coming in hot, he was saying, we'll wait for it. He was looking through all of it. We heard from him early last week, where he once again said that he's expecting a period of disinflation. You take those comments, you take the CPI number, you take the labor market data, and it kind of raises the odds for a rate cut. Well, maybe in September, the first cut. So we'll see. The market reaction, of course, was pronounced. The 10-year, not just the 10-year, but across the yield curve, there was a decline. 8 basis points for the benchmark 10-year bond yield. Dollar index is now under 105 levels. So the dollar index fell about 0.25%. And US stocks, as I said, rallied. The Nasdaq was up about 0.9% or so. That is, a pretty good outcome. Of course, tech and growth, etc., rallied harder because of the fall that we saw in yields. And this is a point that I was making on Friday as well. You need a weak data, but you don't need a dismal data, because the dismal data is bad for stocks. You need, the data just weak enough, which brings forward the prospects for Fed rate cut. And I think that is essentially what this has done. All right, oil prices, they fell about 1% or so. They're about just under $87 a barrel, which now sort of gets us to the local sort of levels here on the Nifty. Now, for the Nifty, the daily upper Bollinger Band stands at 24,457. And I think that is the first target, the immediate target, which the Nifty will aim towards. And of course, above that, the equality level is 24,900. The immediate support for the Nifty are the hourly averages. The 24,176 level, to my mind, is the first sort of the support, a trailing support, which you should keep if you're being long. For the Bank Nifty, low of 51,996 is important. That should not be broken if the up move is to be sustained. On the way up, a break of 53,357 signals fresh up move. We'll see what happens. There is, of course, a fair bit of rotation which has been underway. Markets have done very well. I just want to sort of finish with this last plate of graphics, which tells you how far we've come. We are now looking at the budget. By the way, we've got the date of the budget as well, which is the 23rd of July. It's a Tuesday, and I think now we can really firmly start to focus on what expectations, etc., could be. Out of that, the market will start to preempt some of that. We'll try to pre-position some of that because it's the first time we will hear from the finance minister, the new government, in terms of the vision for the next couple of years, not just this year. But, from over the last 1 month, from the day of the election result, these are the changes which you must keep in mind as you trade these markets. We've had a fantastic rally by any yardstick. Nifty 11%, Bank Nifty 12%, mid cap 16, small cap 20, and the micro cap index is up 24% from the close of the 4th of June, which is the election result. Seems like a distant memory. The Gift Nifty will come up on your screen and it'll give you an indication of how we are likely to start. About 6.5, 7 points. So absolutely quiet kind of a start is what we are looking at. Nigel.
Well, that's right. In the CME Fed tool, the probability of getting a 25 basis points rate cut from the start of the week, it was around 64%. It ended the week at around 77%. Yeah. So we're in a better place in terms of global cues as well. And what do the FIs do? Well, they've been going on for the last few sessions that they've been adding long positions. Now, for the first time in the last 10 sessions, there was some unwinding of long positions. So you want this market to get some shorts into the system. There was some short covering as well. But net, the absolute number in terms of the net long positions, that's come down. They continue to remain net long in percentage terms at around 84% odd. If you look at the FI positioning as well as the client positioning, well, they're on two opposite ends of the spectrum. With the FI as well, that number was almost at around 4 lakh contracts. That's come down to around 3.84 lakh contracts. And the client net short positions is at around 2.8 lakh contracts, both of them at near record levels. Well, I'm looking at the options data as well. And one strike that was very active is a 24,200 put. And that's a good sign. All of last week, even when the markets were seeing some profit taking, that one was seeing a good amount of addition. Open interest up by close to around 18 lakh shares on, and the premium at around 70 rupees. Which brings us to the levels. You're seeing writing at around these levels. And even in Friday's trading session, we bounced off that mark, the 24,169. So just as a reference point in the near term, the high that we saw on Thursday and the low that we saw on Friday. Otherwise, the markets are in a broader range. If you look at the options data, you look at the various technical levels as well. On the downside, it appears 24,100. That's important. On the upside, 24,550. But there are three big pillars of the markets. And at least as of now, there are two of them that are firing. The tech index. You have yields that have cooled off. There is optimism now in terms of a cut that comes about. And also, if you look at it, you are getting into the earnings season. And there is hope that we have bottomed out in terms of IT. The earnings cut cycle is over. And in the last 1 month or so, you'll see that the tech index actually has been a relative outperformer. If you take a little longer duration, in fact, it's up more than 10% odd. So the tech index, that part of the market is doing well. So that's what those constituents in the Nifty will be supporting. The next one is Reliance Industries. It hit that 3,000 mark at the end of February. And from there, well, it moved more or less sideways. Now, in the last two sessions, from that, that 3,000 odd mark that we saw in the month of February itself, well, that appears to be breaking out a little bit. So now you have the 20 DMA that's at around 3,000. And it appears that Reliance Industries is ready for a fresh breakout. So that's going to be an important constituent because for the last 4-5 months, actually, it was moving more or less sideways. But the important one is going to be HDFC Bank because in the last two sessions, it's down by 6.5% odd. And that closed at a crucial level, which is the 20 DMA. So 2 out of the 3 triggers are firing. HDFC Bank, can it get support at around this 20 DMA? That's going to be very, very important and see a bit of a bounce from these levels. So we start off more or less flattish. You get support coming in from the tech space. Reliance Industries appears to be breaking out, yet again, while HDFC Banks, that's crucial. Can it see some kind of support after the recent correction?
I think it's going to be a critical one because of the weight that it enjoys on the Nifty and, of course, everywhere else. Let's get you some calls now. This is Lawrence Belanco of CLSA who is weighing in. He says that while technology stocks continue to dominate investors' attention regionally, he would like to flag the recent breakout in the Asia Pacific Banks Index, as well as the relative setup that points to banks' leadership over the regional benchmark. He also notes early signs of large-cap Indian stocks coming back to life after months of underperformance versus the mid-cap sector. He goes on to say one potential catalyst for this relative improvement in large caps over mid caps could be emerging market fund buying to reduce their underweight in their position.
Well, let's get you some money market views as well. B. Prasanna of ICICI Bank says the recent spate of weak data flows from the US, like poor ISM survey and higher unemployment rate, lends credence to the view of moderation in economic strength. He says the dollar corrected marginally against all currencies and incoming election results in France may create volatility in the euro. He says the rupee is stuck around 83.5 and will remain in a very narrow range. The range he's given is 83.35 to 83.65 per dollar, as an active RBI will manage the range on both sides.
All right, on bonds, Prasanna says that global bond yields had a volatile week as central bank officials continued signaling cautious and data-dependent approach despite economic prints surprising on the downside. He says domestic markets, however, remain stable almost daily, buying from foreign investors. He expects consolidation to continue with a 10-year benchmark bond yield expected to trade in a range of between 6.95 to 7.02%.
Well, we have a lot of stock-specific action to track for you. Get it out in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Tata Motors, Dabur, Marico, AU Small Finance, and InfoEdge. All of them will be reacting to positive news flow. And we're split down the middle today. We have 5 in the green and 5 likely to be in the red. Tata Steel, Titan, IndusInd Bank, Nykaa, and Bank of Baroda.